Hey everybody, welcome back to another beautiful day in real estate. We have a lot of stuff to go over. Actually, the markets, let's just say this, it's expected to be a very volatile and exciting week. Whether that's good or bad, it's going to be exciting. You're going to be on the edge of your seat. So let's just jump into interest rates, and then when we're done, we'll just start on the stories and we'll work our way through today. So interest rates are on their way up today, and we'll talk about why in just a minute, but we're still below 6.5%. We're still at the 5.9 to 5.9 for VA and FHA. I still think this is just going to be the norm for right now. In what do we have? About 11 days, and the new Fed president is going to be confirmed, and then we will have Kevin Warsh in office running the ship. You know, a lot of people expected him to, and I'll just talk about this for a second, but a lot of people are expecting him to come in and just dump rates. I really don't think that's going to happen. I think he's going to restructure the way the Federal Reserve operates. I don't think it's just going to be a come in and, well, we got to drop rates. They're going to restructure the way that things are. And I've heard that they're going to redefine what inflation is. They're going to redefine what a recession is, and they're going to redefine the rules of the Federal Reserve, like a complete facelift. Obviously that's not exciting news for a lot of people. They kind of expect, the worst, but it might be exactly what we need, right? Everything that we've seen in the last year, 2 years, has really been towards restructuring the way that our system currently is and how can it be better, right? If you're talking about blockchain or cryptocurrencies and you pay attention to it, you're building a system and a software that can help utilize, whether it's money flow to be seamless or product to track from point of origin to point of sale, or you're talking about security behind, risk on and risk off assets. If you're talking about, technology as far as the internet space and as a whole, there's an evolution behind it, right? It's more of a quantum-based system versus the internet system, right? So for me, the money system is something that is the biggest blaring fact in our head. And it's like, how do we expect that not to evolve if everything else is? The way that we shop has evolved, the way that we rent, cars and hotels. We have Airbnbs, we have Turo now, evolution, right? The way that we spend money is no longer, you go to Target now, every self-checkout is credit card only, right? They're transitioning away from cash. They stopped printing the penny or, minting the penny, excuse me. To me, this just seems like another part of the evolutionary standpoint of what's next and what can we expect, right? And for us to do that, I don't know if anybody's ever heard of the Rosie Rios speech. It was probably, 10 years ago, 15 years ago now, that you need a ginormous shock to the system to make that change, or to see things change to a different perspective, to essentially revamp the way that we see money. And we are in the middle of that right now. That's what the Clarity Act comes into play for. If you're looking on the crypto basis, right? It's clarifying what a crypto company is, what trading crypto is, how can you hold it, how can you create ICOs or initial coin offerings like an IPO, right? And it's basically creating a structure behind the entire system, which is cryptocurrencies and blockchain. We had the Stablecoins Act passed, which clarified how stable coins can operate and how you can create value behind that. This is just one step in the process, right? And I think the war in Iran really kind of pushes us into that new world. What was it, 2008, 2020? 2020, Biden came out and said that he was going to be initiating sanctions on Russia, where they no longer could use the U.S. currency to trade, to buy oil and buy natural resources. So they switched over to cryptocurrency to do it. You have China that went from, the dollar to the digital yuan when they hosted the Olympics a few years ago. And now there's the digital credit system. I mean, we're just in the beginning of this, is what I'm thinking. And I think that we have a few years of regulatory framework to come in. And if we see it change, it's going to be in the next 4 years. The next 4 years, we're going to see it. And that being said, let's just jump into what we've got today, and we'll kind of keep moving along. So oil spiked up yesterday and then came back down. What am I on, the 5-minute chart? Oh my God, let's go to the daily where we belong. Okay, that looks better. Okay, so oil is kind of all over the board right now. So oil spiked up. First it went down because they said that, Trump said that the United States is going to be guiding ships through the Strait of Hormuz, right? It's at 0 ships a day, essentially. And they are stating that, okay, we're going to come in and we're going to bring our allies through. They've asked China to help them do that. So oil went down, and then news came out that an Iranian missiles hit a United States ship with 2 missiles, and the oil went back up. And then the markets opened this morning, and now we're kind of right here. This is a ton of volatility. Like, this is something that's kind of crazy to me. The amount of volatility here, 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 here. I mean, it's up and down. It's so all over the place. There's not really a way to grab, not really a way to kind of find a peace of mind, if that makes sense. We're just kind of waiting. It's a lot of hearsay, but the hearsay is making everything very unpredictable, right? You come out with a tweet saying everything's good, and then everything's not good. And then you come out and say that everything's bad, and then everything's good, right? Like, it's just kind of all over the place. We opened up the week with the S&P 500. We were relatively close to all-time highs. All-time highs were at 7,269, 270, somewhere in that range. And then now here we are at 7,230. Again, we're seeing that big pressure. I want to say, what was it? $9 trillion was added to the S&P in the month of April. $9 trillion. This just reconfirms my opinion that the stock market is way too volatile, way overvalued. I don't know if you guys know much about Berkshire Hathaway and Warren Buffett, but Warren Buffett retired from Berkshire Hathaway. He's the one who founded and ran it for the past 30-some years. He now is retired. But Berkshire Hathaway has the largest amount of cash they've ever had. I want to say 376 billion is the number that comes to mind in cash right now. That is the expectation that markets are going to go down, and they're going to go down hard. They're going to go down fast. The stock market has been overvalued for many years, probably at least seven, if not more. And something that really was interesting this morning is I woke up this morning to one of the most wild things I've ever seen in the bond market. The bond market moved significantly this morning, all within 5 minutes. Here's what we saw. For those of you that don't know, this is not a normal move in the bond market. It has been all over. We saw a 10% decline. What was it? Let's just find this real quick. We saw a 10% increase in bond markets today and decline. Came right back down. What does that mean? The bond market is countries buying and borrowing essentially promissory notes for the US dollar. And somebody just dumped a shit load of 2-year bonds on the market. When the market has little demand, the bond market yields go up, and it spiked 10% in 5 minutes. That means that somebody somewhere or some entity is dumping because they have zero belief in the dollar again. Zero belief. And I caught this again. So I pull a lot of my stuff from X because I feel like it's a lot more refined. It's not so, how do I put it? It's not so headliney, if it makes sense. There's usually data that goes behind it, or at least some sort of opinion that you can absorb that's going to make you feel a little bit better than just watching Fox or CNN, right? So something crazy just happened in the bond market. The 2-year U.S. Treasury bond printed some of the most violent candles I've seen on a 5-minute chart in a long time. We're talking about a spike of 3.9%, all the way to 4.3 in just minutes. So the yield went from 3.9% to 4.3. To put that into perspective, the 10-year bond has been sitting at that 4.4 and relatively between 4.4 down to 3.9 on the lowest, right? So it moved from 3.9 to 4.4. This goes all the way back to the beginning of March. That's how long it took to see this volatility. And this moved from here to essentially here in 5 minutes. That's terribly insane to me, okay? Saying that it happened 3 times. A glitch doesn't happen 3 times. Someone just dumped a massive amount of U.S. Treasuries onto the market. When you sell bonds, yields go up, just how it works, right? So whoever did this didn't care about the price they got. They just wanted out ASAP. The bond market is one of the most important markets in the world. It's the central banks, foreign governments, and biggest institutions on earth park their money, right? Regular people don't move to your bonds like this. This is a large player. So bonds are bought by countries, by companies like JP Morgan and BlackRock and Vanguard, massive companies, right? But we've heard of this before. I mean, I don't know if anybody's been paying attention, but I've heard of the instability in the bond market for quite some time. And it's a building effect, right? So first, we have the private credit issues where we're seeing companies not being able to, big companies, JP Morgan, Blackstone, even BlackRock, people were requesting to pull their money out of the private equities market at only 50% got their money. 50% of people. So imagine there's two of us sitting here and one tries to pull out all of his money, and so does the other one, but only one person gets their money. That's not a good sign, right? We have credit card debt over $1 trillion. People are so below water when it comes to credit cards. And to me, credit cards are the most insane thing, right? I use them all the time because I know how to manage my money a little bit better. But most people, they buy it, they use it expecting to pay it back, and then something comes up where most people live paycheck to paycheck where they can't afford a big bill. So they put their money on the credit card, use that money to pay the big bill, and then they're belly up because it's a 25% interest rate. When you have a 25% interest rate, you never dig yourself out of it, right? Unless there's some way you pull a large amount of money out of your ass, you're screwed, right? So credit card debt is continuing to rise. You have the debt crisis for cars. So many people are belly deep under their cars right now, and most people can't pay them off, right? You have all of that going on, and then you have the affordability in real estate. Like, again, I'm still going to be a proponent that real estate's a better place to be than any other market currently. In North Dakota, it's the strongest market that I've seen in the past 4 years. I'm talking houses. I just talked to somebody this morning. Somebody who was one of our title companies talked to one of the owners. They talked to a realtor this weekend who put an offer in for $30,000 above market and no contingencies and lost the deal. That is a very hot market. If we were in a seller's market in North Dakota, you would barely be getting one offer. It would be below market value and you wouldn't get it. People are still out here buying houses in North Dakota. A lot of people are out here buying houses in North Dakota, but across big metropolitan areas, New York, Austin, Denver, Phoenix, East Coast, California, Washington, Oregon. There's tons of people that are getting foreclosed on because the average house out there is $600,000, $700,000. I know a customer of mine is building a house. They sold their house in California. They got 11 offers in one day. 11 offers. Granted, it was a nice house, but it was only 3 bedrooms, 3 bathrooms, and like 2,000 square feet, and it was at $750,000. Now, to a lot of you, that maybe that's just normal. To me, that's fucking insane. In North Dakota, I can buy a 4,000 square foot house on one of the nicest lots with one of the best views in North Dakota for $700,000. It's a different market. It's a different world across the country, right? So anyways, all of those things are really adding up. And then you talk about the inflation, you talk about the devaluation of the dollar, you talk about the bond yields going down. Right now, the only thing that makes sense to me is that we're going to see quantitative easing moving into midterm elections. Like I said, Kevin Warsh is going to come in. I don't think it's just going to be interest rates dropping. I think quantitative easing is going to be a bigger thing than that because everybody's expecting the interest rates to drop, which means they're not going to. That's just how the market works. When everybody's expecting one thing, typically the opposite happens, right? So back when I first got into cryptocurrencies, I was buying Bitcoin or buying altcoins and expecting all these insane price predictions. Everybody was saying was going to go to this, and then it goes the opposite way. And I realized very quickly that that's typically how most markets are, right? When somebody you don't know or somebody that is just telling you to buy something, typically you're past the point of no return. And NVIDIA was a big one for me. I saw NVIDIA run up 1,300%, and everybody's shoving their money in at all-time highs. I'm like, you guys are out of your effing mind. But anyway, so it wasn't just the 2-year bond. It was the 2-year, the 5-year, the 20, and the 30-year bond. Major volatility this morning. And there's really not an explanation on what's going on currently. We haven't got anything other than the data saying, look at what we're seeing, right? They say this is either a massive algo error or a flash crash or someone with an enormous position being forcibly liquidated. Nobody knows yet, but something just broke in the bond market. The bond market is getting scarier and scarier by the day, and I don't think people are really ready for that. But with that being said, I'm wondering, I still think a blow off top is coming because yes, we're seeing a lot of big players go back on cash, right? Reeling it in. But then you see stuff like this where insiders just started massively buying risk assets ahead of the U.S. stock market today. This was tomorrow. This was yesterday that was posted. Every single insider buying billions right now. Zero sales, 917 buys, 8.9 billion in volume. Looks like a huge pump is coming tomorrow. I mean, the market hasn't really pumped this morning, but as we've talked about before, the S&P 500 has been on a trajectory moving in the right direction. If we go back and look at Bitcoin even, so like Bitcoin is becoming more of a tall tale. We are kind of stuck under 80,000 currently. What? No, that's not what I want. There we go. Okay. So let's do this. I'll pull this up so you can watch me. But we're on the daily chart where this is Bitcoin. We're going to pull it here. So hypothetically, it's very quick, so bear with me. But this is essentially a bearish channel, right? When you see volatility tightening as it moves up, typically you're going to see it break down before it breaks up. It's very possible, right? So we kind of saw it here. We had 1, 2, 3, 4 breaks down. Now we're kind of doing the same thing, right? It's going to be in a bit of a negative trend right now. So, and unless we see some good news across the board, I'm expecting Bitcoin to kind of go back down. I've seen some of the traders I've been listening to talking 58, 59,000 before we see a blow off top. But I still think at the back end of this year, we're going to see that happen because, again, it makes sense to me right now. Everybody's very concerned about what's going on. People are very skeptical about the money and where they're putting it. And again, typically what everybody's doing, you should be doing the opposite. So we've been doubling down on all of our investments this year. Like either we are going to sink or we're going to swim. And there's really, really no in between at that point, right? And then after I saw the previous thing I just showed you, this popped up, which this is a very good source for good information, the Kobayashi letter. Wealthy investors are all in on equities. Equity allocation among high net worth individuals is up 65% of total assets, the highest since December of 2021. This percentage has risen 7 points since 2023 and just below the 2021 meme stock frenzy peak of 66. You guys remember what happened in 2021? GameStop went on the biggest tear ever. It was one of the first times I ever traded it and made like $2,000 in 5 minutes. It was the craziest thing I've ever seen. It was gambling, don't get me wrong, but it was fun. By comparison, the 2020 pandemic low was 54%, while the long-term average is 57%. At the same time, cash holdings fell to 10%, the lowest since 2018. High net worth individuals now hold just 18% of their capital in bonds. Risk appetite is through the roof. Now, we talked about Berkshire Hathaway. So you have Warren Buffett. He's extremely, extremely conservative. He's read the book called The Intelligent Investor. It's the most boring book on the planet, but it explains things to a certain level that most people never will get into. If you really want to understand how investing works, that is the book to get in. It is old as shit, and it has perfect information that is very relevant to today's market, last year's market, 10 years, 20 years, and it'll have relativity, as we move forward. But what this is saying to me, Berkshire Hathaway being extremely conservative, right? Run by Warren Buffett for a very, very long time. He decides he's done, he retires, and they pull 80% of their valuation in cash and capital. So they're expecting a downward turn. But when people are buying high-risk assets, especially high-income individuals of this nature, there's an expectation for a blow-off top. So when the market looks shit, like it does right now, other than the S&P, the market looks terrible, right? Like things aren't looking great. But if they're buying now, which leads me to believe something's going to happen over the summer moving into the fall where we're going to see this major incline, and then these investors, these retail investors are all going to see it, and they're going to rally, and they're going to jump in there at all-time highs thinking that it's going to be the next retirement, and they're going to get demolished. They're going to get slapped. They're going to get thrown around. They're going to get drowned. They're going to get buried. And that's, again, we look at both sides of what's going on here. If we go just say, well, Berkshire Hathaway's got all that money, capital on the sidelines, so clearly the market's going to crash, or we go vice versa and saying we're seeing all this money going in, so obviously it's going to run forever. You have to level out what you're paying attention to, right? So this is why I'm paying attention to getting into more real estate, because if the market does crash and I'm 5% below market value, but I can still cash flow on my properties, or I'm building inventory homes in a time right now where there's no inventory. I had an open house yesterday. I had people in there the entire time talking about building, talking about getting into homes, because nobody can find what they want in my market anymore. Nobody can. First time home buyers, second time, patio homes, all of these things are on and off the market in a half an hour. So for me, real estate seems strong and feels strong in North Dakota. So that's why we're going to keep focusing on that. Now, I don't know how trustworthy this information is, but it's the last thing I'll leave you with to move on to your Monday and enjoy your Monday. But Fed president will make an emergency announcement today, 12:50 EST, Eastern time, and insiders report that he will officially start QE money printing and announce a $50 billion liquidity injection. All eyes on the Fed today. This would be the way to go out, man. If he came in here on one of his last weeks and he's like, we're going to start printing money, $50 billion. that could be that major announcement, and why you're seeing so much big money purchasing all of these risky assets. High risk assets run when there's quantitative easing, because it's liquidity that gets pushed into those markets. When you push liquidity into those markets, everybody feels comfortable and excited and strong. So to put it in perspective, the biggest amount of money we saw injected in a month was $16 billion. That was last month. In recent years, before we did quantitative tightening back in 2024, 2023. Long story short, this is interesting to say the least. I don't know what to expect today, but I am telling you this. I still believe real estate is going to be the #1 mover this year. Right now, it's the year of the buyer, the year of the builder. Just give it some time. Start getting prepared. More people than ever are looking to buy right now. They're slow to the punch, but they are out there. There's not buying on the spot anymore. It takes a day or two to get things figured out. It might even take a week if you're looking to build, to figure out what keys make sense. But what we need to be expecting is that there's going to be some very high volatile movement in the next couple of weeks. So all the information that we brought you here today with, make sure that you're kind of factoring that in today and over the week. Don't let your emotions guide you through this. Try and get as educated as you can. I just picked up my new book by Coach JV. So excited. This is The American Nightmare. I'm so excited. JV has been a mentor of mine for over 4 years now. And now I get to really dive into the person behind the scenes that built the multi-million-dollar businesses that he has today. So thank you for watching, you guys. I look forward to bringing you more information tomorrow. Let's see what volatility we can see. Have a great day. Enjoy your week.